Hello, traders, investors, and fans of the digital revolution. Welcome to our channel where we bring you real analysis, breaking news and trends about the future of decentralized finance. Today, we are going to talk about something surprising and extremely relevant. Bitcoin, BTC, has not only broken all-time records, but is now surpassing gold as a hedge against inflation and currency devaluation, according to a recent report by JP Morgan Chase. That's right, gold, for centuries seen as the safe haven for investors, is losing ground to Bitcoin, and this may just be the beginning of a new era in the global economy. In this video, we will explore why JP Morgan is confident that BTC will continue to outperform gold. What are the real catalysts behind this explosive rise in Bitcoin? How companies and even governments are buying BTC on a large scale? And whether you should consider adjusting your portfolio for this new reality. If you want to understand why the financial world is starting to see Bitcoin as digital gold 2.0, keep watching until the end. Why is Bitcoin outperforming gold? According to JP Morgan, the so-called base trade, a strategy used by investors to protect their assets against excessive printing of fiat currencies, lost strength in 2025 before many bet on gold and Bitcoin. Now, this movement has become a zero-sum game. When one goes up, the other goes down. And guess who is winning this confrontation? Bitcoin. Between February and April 2025, gold led the gains, but in the last few weeks, everything has changed. While gold has fallen 8% since its peak on April 22nd, Bitcoin has risen 18% in the same period. Real catalysts for Bitcoin's rising. According to JP Morgan, BTC's rise is no coincidence. Some factors are making Bitcoin even stronger. Massive corporate purchases. Companies like Strategy, formerly MicroStrategy, and MetaPlanet continue to buy BTC as corporate reserves. Strategy has already acquired 60% of the $42 billion plan by 2027, and other companies are expected to follow suit. U.S. states adding Bitcoin to reserves. State governments in the U.S. are jumping on the bandwagon. New Hampshire has authorized allocation of up to 5% of assets to Bitcoin and gold, while Arizona is creating a digital asset reserve funded by staking and airdrops without raising taxes. Investment flows shifting. Investors are moving out of gold funds and into spot Bitcoin ETFs and crypto funds. This shows that institutional interest in BTC is growing exponentially. Evolution of cryptocurrency derivatives. Another point highlighted by JP Morgan is the evolution of the cryptocurrency derivatives market, which is increasingly attracting institutional capital. Major players are strengthening their position. Coinbase bought Deribit, Kraken acquired NinjaTrader, Gemini obtained a license to offer futures in Europe. These moves are paving the way for greater liquidity, better infrastructure, and an even greater influx of large funds into the crypto sector. What does this have to do with you? You may be asking yourself, okay, but what does this have to do with me? A lot. This change in the global scenario means that Bitcoin is no longer seen as a speculative asset and is becoming part of the traditional portfolio of large investors. And if JP Morgan, one of the largest banks in the world, has already recognized this trend, perhaps it is time for you to rethink your positioning in the crypto market. Why is the future Bitcoin? In addition to institutional adoption, Bitcoin has unique advantages: limited supply, maximum of 21 million, proven security, reduced volatility as the market matures, greater liquidity than gold in many global markets. With spot ETFs approved, new regulated exchanges, and giants buying BTC as reserves, Bitcoin is consolidating itself as the new safe haven asset, and this could make all the difference in the long term. The JP Morgan report shows that we are experiencing a historic shift in the global financial market. For the first time, Bitcoin is surpassing gold as a form of protection against currency devaluation. And the catalysts are clear: massive corporate purchases, inclusion in state reserves, growth of the derivatives market, and the flow of institutional capital into the crypto sector. If you are building your portfolio or thinking about and diversifying, do not ignore what is happening in the crypto world. Bitcoin is no longer just technology. It is becoming a global financial infrastructure. If this video helped you better understand this new phase of the crypto market, like, share, and subscribe to the channel, activating the bell to receive notifications whenever we release content about cryptocurrencies, market analysis, Web3, and trends in the money of the future. Let us know in the comments, do you believe that Bitcoin will really replace gold as a safe asset? Or would you prefer to keep your assets in precious metals until the next video? And remember, invest wisely, always learn, and be ready for the future of digital money.